Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 future chart. S&P currently trades at 3,868. Of course, yesterday was a highly volatile trading session. We did briefly dip below the 0.5 fib area, but we did pair most of those losses and we actually closed at around the current area where we find ourselves trading now. Good news is that we did manage to close back above the 0.5 fib area. I just look at this chart from a technical perspective. We've seen a clear break of the 200-day moving average. And of course, this uptrend that we've been trading in since October. And now the next key areas of support is the 0.5 fib area all the way to the 0.618 fib area. And that is where the December low occurred. And that was right on 3,760. Now, if we were to have a daily close below 3,760, that to me would then indicate that we're now likely to go and test the October lows that we achieved back in 2022, which was all the way down around 3,492. Now, the good news is that I don't expect this to happen. I am anticipating for a very sharp rally going into the end of this month. I've been saying that this whole month of March, despite all of the volatility which has occurred surrounding the Silicon Valley Bank, from my cycles, they're indicating to me that from the 15th of March, which is the 10th trading session in March, we are expected to see a very sharp rally up until the end of the month. What's also interesting, I want to draw your attention to this chart here. This is a spread between the 10 and the 2 year. Yesterday, we have seen a snap of this downtrend that we've been trading in pretty much since the start of 2022. Of course, this was a inverted yield curve, and this typically indicates that we're going to enter into a recession. Now, what happened yesterday is that we've broken out of this downtrend, and if we continue this momentum towards the upside and go back above zero, which is only just up here, that then, of course, forms a uninversion of the yield curve. And history will tell you that when this does occur, a recession is typically 3 to 6 months away. So what this tells me is that either inflation has broken or the economy. And of course, we saw the first crack in the system with regards to the Silicon Valley Bank. So it's going to be very interesting to see what happens in the next couple of quarters. So definitely have that in mind. You want to be looking at the bond market. And of course, talking about the bond market, yesterday we had the 2-year note crash at its fastest pace in over 35 years, where we've basically taken 100 basis points off the market now. And in fact, the bond market is now telling us that interest rate cuts are expected before January 2024. So it just shows you how quickly things can change. It was only this time last week when the 2-year note was telling us that we were almost for certain expecting a 0.5 basis point hike next week and in May. So, things are changing quick. In the stock market, I myself and my Signal team still have a position open here in the S&P 500 and the Dow Jones 30. And if you would like to get involved in those trades, it's still not too late, guys. Then please do not hesitate to scan this QR code on your screen. I charge a very small fee of $29, and that's to receive my signals and research. A very small fee.